Ladies and gentlemen, good day and welcome to the Gujarat Fluorochemicals Q4 FY24 earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Archit Joshi from Batlivala and Karani Securities India Private Limited. Thank you and over to you, sir.
Thank you. Good evening, everyone. On behalf of B&K Securities, I welcome you all to the Q4 FY24 earnings conference call of Gujarat Fluorochemicals Ltd. We have with us today Dr. Bir Kapoor, CEO and Deputy Managing Director of the company, along with his team. Without further ado, I'd like to hand over the floor to Dr. Bir Kapoor for his initial remarks, post which we can take questions from participants. Thank you and over to you, sir.
Thank you, Archit. Good evening, everyone, and a very warm welcome to all of you on GFL's earning call for the quarter and full year which ended on March 31st, 2024. The company announced its quarter 4 and FY24 results at its board meeting held today on 6th of May, 2024. The results along with the earning presentations are available on the stock exchanges and on our website. I will briefly talk about the numbers and then give you an update on the business operations and the outlook. The company reported a consolidated revenue from operations for quarter 4 FY24 of rupees 1,133 crores, which is up by 14% quarter on quarter. Consolidated EBITDA for this quarter was rupees 238 crores, which is up by 15% on quarter-on-quarter basis. The EBITDA margins for quarter 4 FY24 were 21%, which remained flat on quarter-on-quarter basis. The consolidated PAT for this quarter was at 101 crore, which is up by 26% on quarter-on-quarter basis. On a full year basis for FY24, the company reported a consolidated revenue from operations of rupees 4,281 crore, which is down by 25% on year-on-year basis. Consolidated EBITDA was 955 crore with EBITDA margins at 22%. The consolidated PAT was at 435 crore with PAT margin at 10%, while the capex for the year was at rupees 1,050 crores. Let me briefly take you through the performance of each business segment for the quarter. The bulk chemical verticals saw improvement in volume from the previous quarter, in which our plants ran at full capacity. However, the prices of caustic soda and MDC continue to remain subdued because of increased supplies due to excess capacity creation, but we believe these prices have bottomed out and we expect to see the improvements going forward in the subsequent quarters and perhaps in this financial year. The fluorochemical segments also witnessed pickup in the volume of refrigerants. However, the prices remain sluggish. Overall, this business is expected to remain at similar levels for FY25. The specialty chemical volumes and prices continue to be sluggish due to dumping from overseas, which is from China, and which impacted revenue and margins. The fluoropolymer segment witnessed improvement in volumes during the quarter and the prices remained stable. As we had guided in the previous call, we believe our core business segment, which is fluoropolymer, has already bottomed out and we will see continuous growth in the subsequent quarters. The exit of legacy players and the improvement in the utilization levels of new fluoropolymer capacities that were set up in FY24 are expected to result in continued increase in sales. We have built sufficient capacity in the fluoropolymers to be able to deliver growth for the next year and perhaps in next couple of years. The green shoots that were visible have started translating into numbers now, and I would re-emphasize that we expect FY25 to be far better as compared to FY24 for this segment. In our new battery chemical vertical, the details for which we had shared alongside our quarter 3 results, we are progressing well and it's going on as per our plans. We had commissioned our LiPF6 plant and now in the process of sampling and customer engagements. We expect to achieve commercial sales from this segment in the second half of FY25. We have a capex target of 800 crore in this vertical in FY25, and this segment is expected to be a major growth driver for GFL from FY26 onwards. Our return ratios have been affected this year on account of drop in revenues and profitability. Also, we have incurred high capex, particularly in the EV battery material space, which should start contributing meaningfully to the top line only after FY26 onwards. This year has been a challenging year for us. However, I can assure you that the growth fundamentals are firmly in place. We have continued to incur growth capex despite the macro headwind, as we believed that these headwinds are temporary, and we are very well placed to return to our growth journey very soon. As I have already communicated in the previous calls, our financial performance have been bottoming out and we are seeing a constant signs of improvement. This should continue going forward as we'll see continuous growth over the quarters. Before I close, let me also update you on the sustainability related initiatives. In 2023 S&P Global Corporate Sustainability Assessment, GFL's ESG score at 49 was significantly higher than the industry mean. With this, I let the floor open for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and congrats on good set of sequential recovery. My first question is, so you mentioned in terms of fluorochemicals, there has been dumping from China. So what is your assessment in terms of whether there are new capacities which have come in fluorochemicals and the same is applicable even for fluoropolymers? So just your views on the same. Thank you.
Yeah, I think at least in my opening statement, when I mentioned about the dumping, I was referring primarily into the fluorochemical space. In fluoropolymers, which I had always stated is advanced material segments, and the grades that we are offering and the entire book grades that we have, it is not impacted from the Chinese dumping at all. That was statement of Chinese dumping was in context of the fluorochemicals and the specialty fluorochemicals particularly. Answer your question, Rohit? Hello?
Mr. Rohit, can you please?
Yeah. Am I audible?
Yes, you are. I can hear you,
sorry.
Rohit, please.
Sorry. My second question is, sir, in terms of LiPF6, where are we currently in the validation process? And when do we expect actual commercial supplies starting to international customers? And in terms of the domestic market also, if we have any kind of timelines as to when the domestic manufacturing is likely to come up and whether they'll be starting serving them immediately once those facilities are commercialized. Thank you.
See, we had indicated earlier in our February call that the revenue and the sales of battery chemical would start trickling in from the second half of this financial year. We are still on track with that. Samples are at the testing stages, and it takes certain time because battery chemicals are dependent a lot on very extensive and rigorous testing. And we expect to see revenue from this trickling in, I would say, and it will take almost a year and a half for the revenue stream to become meaningful, as I stated in my opening comment. So this is referring primarily to LiPF6. Now you asked about the Indian market. Indian market in EV.
Thanks a lot and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good evening, sir. Thanks for taking my question. I'm going to start with the EV segment, following up with what we said in the previous call. We anticipated a funding there. So our balance sheet today is almost 1.8 times net debt to EBITDA, and we are expecting another 1,300 crores of capex in FY25, and we want to do a total capex of 6,000 crore in the EV segment. Where are we in the funding? Because I think that remains a critical element to watch in a time where our standalone balance sheet now looks like doesn't have too much of a headroom to fund that.
So, Sanjesh, thanks for your question. If you look at our capex plans, so we have always stated that going forward, the funding for the EV business, which we have shown as 800 crore, will come from the external funding, and we have already initiated that process. We had said that it takes 4 to 6 months, and we have appointed investment banker and moving ahead with that. So it's going as per plan, and in addition to that, we have also shared in our presentation GFL capex, which is 500 crores, will continue as per plan, which is essentially on the new fluoropolymers capacity addition that we had indicated earlier. Does it answer your question, Sanjesh?
There is a small problem. I think operator need to note this. Your voice is getting blank in between. I don't know, it's only for me or for everybody. Your voice is getting blanked in between, so I got the gist of it.
Is it better now?
I can hear you. We could hear you. It's just that in between it goes completely.
I'm sorry. My apologies for that. Let's hope it doesn't continue like that.
So now I got that we are looking at that 800 crores to come from external. Is that the capex dependent on that we get the funding, or we have any other plans for it?
Not really. I think the business fundamentals are very strong on EV. Sanjesh, we had indicated that. So definitely one of the options we had indicated is this funding. But other than that, we will look for alternate option if it doesn't come, but we'll continue with our plan.
So it's not dependent on that we do the funding, at least for FY25, not beyond that?
Right.
Okay.
Because the growth fundamental of the business is very strong, Sanjesh. And as you know, and we have always said it, it's an upcoming business. And we'll continue with our plan.
And where are we spending this 800 crore? Can you elaborate what are the...
It's essentially on the battery chemical and the product range that I had described. It's not really I cannot give you the specific names, but clearly in what we had indicated earlier was electrolyte salts, okay, and cathode active materials, and also the binders, cathode binders. These are the broad categories in which we'll be investing.
No, that's fairly clear. Thanks for that elaborated answer. A related question again is that where are we in the approval cycle for the battery grade PVDF and the semiconductor grade PFA?
The battery grade PVDF is already, as I said, that it's already in the process. It has gone to the next level of approval. It has gone to the electrochemical testings. All I can say it's at the final stages of getting approved. Okay. And we are engaged with multiple OEMs. And as far as PFA is concerned for semicon, I had indicated that earlier as well, that we are already supplying PFA to semiconductor applications. But we have been trying to upgrade into higher and higher segments within the same sector. And that journey is on as we speak right now.
Got it. You made a very interesting comment, sir, during your opening remark that you are looking at the green shoots in the fluoropolymer. Is it across the category PTFE, PFA, FKM and PVDF or it's more for the performance solution which is PF and FKM and less for PTFE?
The green shoot, when I said, it was with respect to, you saw several quarters, our performances were subdued, particularly because of destocking. So the green shoot was in context that the destocking is phasing out and there has been a pull in terms of demand. And those were the green shots, green shoot that I mentioned. And that is all across. Okay. So that was definitely for PTFE as well as all our new fluoropolymers.
And how has been the domestic market? It still continues to remain challenging for us?
It remained challenging in certain segments, partly because of, the imports in certain lower end grades from China, which has been a challenge. Otherwise, in higher end grades, yes, it is fine, but in certain grades, particularly the granular, it has been a challenge, yes.
Couple of bookkeeping questions. One is on the operating cost. Quarter on quarter appears to be gone up very sharply. Why such a sharp jump in the operating cost for a company which is largely run continuous manufacturing? And number two is in the working capital. We are now at 167 days. We were targeting below 120 days. It's a huge gap, which we bridged in last 2-3 years, but again built up on that. So more clarity will be helpful.
Yeah, sure. I'll let Manoj answer that. But the broad answer for that is that, we have added capacities and these are in the process of getting utilized. So that's where some of the higher cost is coming up. But let me hand it over to Mr. Manoj Agrawal, who will answer it with a lot more details.
The operating costs are particularly higher at the year end on account of year end provisionings, one. Second, on account of discharge of the CSR obligations, two. Third, some of the capexes which have gone on stream, some operating expenses relating to those capexes have gone as a P&L expenses now. So these are the three essential reasons. And fourth was the Red Sea crisis has increased our movement expenses. So that is on another additional impact which has happened. So these are four reasons because of which operating expenses have gone up in this quarter.
And working capital?
And working capital is essentially as such, absolutely it has not gone up. But because the sales were down, so it is a numerator and denominator impact. So number of days is particularly higher in those finished goods areas because sales were down. As soon as sales picks up, it will improve.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question. The next question is from the line of Rohan Gupta from Nuvama Institutional Equities. Please go ahead.
Yeah, hi sir, good evening and thanks for the opportunity. Sir, first question is on fluoropolymer. I mean, if you refer to your last Concall, you mentioned that this year, FY25, you see a significant growth in fluoropolymer, which will be primarily led by volume and almost taking us to previous year profitability. Sir, do you see that that kind of pickup in fluoropolymer has already happened? And overall, for this year, we can achieve those numbers which you were guiding the last quarter, sir?
Yes, Rohan. We absolutely see that, and in fact, that's where when I mentioned my opening comment, green shoots, that's where we say that we expect it to give us the results that we are looking for. So fluoropolymers, not only volume, we are also, as we have added capacity in new fluoropolymers, the volume coming into new fluoropolymers, and some of them are advanced grades. So it's a combination of the two, the volume plus value-added grade which is coming in the new fluoropolymers. Combination of the two will give us what we are looking at, and give or take a quarter here and there, which I have stated last time also. But the fundamentals are strong, and we are, well within that range that we are targeting right now.
Okay, that's good to hear, sir. Sir, question on the approvals which you mentioned in the PDF for the battery grades, though you give answer in the previous question. Sir, if it will be possible for you to share some more timelines related to that in terms of where we are in the approval cycle. I'm sure that you are dealing with the multiple customers, but what kind of volume you think that your customers have started giving you indication that we can build up for the current year and for the next year, more in a PVDF high-grade battery for the battery uses, and also if you can give some sense on a LiPF and PFA.
Yeah, Rohan. First of all, the approval cycle or approval process of PVDF is a complex process. It has multiple stages. It's because since we are dependent on customers to do these testings and respond back to us, it will be difficult for me to give any specific timelines on this. However, typically this process takes a long time. Depending upon the customer, it can take definitely over 6 to 8 months and sometime beyond a year as well. But from our side, I think we are into almost the final stages, which is the electrochemical test, which is going on with our customers. Volume indications with respect to customer would be difficult for me to provide right now, but whatever we have planned or we have indicated the capacities in new fluoropolymer, I think we should be able to achieve that going forward.
So just further on this, in last 3 months, a lot of work has been done with the battery manufacturers in India under the PLI schemes, and many battery manufacturers have come forward. Are we in a process of also working with the very advanced stage with any of these domestic battery manufacturers, or is still the focus is in export markets only?
We are working with almost all the battery manufacturers who are coming up in India, and we are well entrenched with their plants. And as and when, because those capacities have not been set up yet, and some of them are starting now, and it's at very, very early stages for Indian market. We expect Indian market, particularly the battery capacities, to come from 25 mid onwards. Okay, so it's almost still some time away. However, we are engaged with almost all of them in terms of all the three product categories that we talked about, and most importantly on the electrolyte chemicals and binders.
Thanks, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Nitin Agrawal from DAM Capital. Please go ahead.
So thanks for taking my question. So just to get a couple of numbers, just reiterate those numbers with you. So on the fluorochemicals, did you just reconfirm your guidance that you said we'll have a flat year on fluorochemicals this year?
Yes, in fact, fluorochemicals going forward in FY24-25, we expect to be on a similar level, maybe soften a little bit, because fluorochemical for us includes refrigerants and specialty chemicals. In refrigerants, there have been certain headwinds. You may be knowing about it, particularly the duty cut that has been there in U.S. market. And second is the phasing out of R22 quotas over a period of time. So both actually is expected to impact that, and the fluoro specialty to some extent is stable for us, more or less, because it's a relatively small vertical for us, and the prices have been subdued because of the Chinese or the imports, low-cost imports. So we expect it to remain at the similar level or the slightly lower, not expecting any growth in that sector, that verticals particularly.
So, sir, then given this sort of softening of outlook on this part of the business, we had earlier guided that F25 EBITDA would be similar or higher than F23 EBITDA. Do we still hold by this guidance, sir?
Yes, to some extent, because as I answered in the previous question, that it will be driven primarily by our fluoropolymer business, and we have stated that earlier also, because the earlier numbers, let's say if we go back and look at FY23 numbers on refrigerants, there was, in a way, it was inflated or higher because of R125, and R125, there was a sudden pickup in the market and the demand in US because of the high duty. So, but those were, in my view, opportunistic, and those are no more available. So the growth that we are seeing in fluoropolymers now, or the overall growth which will be led by fluoropolymers, would be much more stable, because this is led by now the newer capacity that we have already added over the last 1 year or a year and a half. And so this is correct, that whatever we have seen going down with respect to the FY23 in refrigerant fluorochemicals or the bulk chemical segment, which is because of the subdued prices, would be made up by growth in fluoropolymers.
Okay, if I get the last one, on the fluoropolymers, now since there is so much growth expectation which is there on the fluoropolymers, our capacities, are they? You mentioned that our current capacities will take care of the growth for this year, and so at what stage do we need to meaningfully start putting up capacities to meet our fluoropolymer demand going from here on?
See, fluoropolymers have a natural growth level of, I would say anywhere from 5 to 7%, depending upon, fluoropolymer to fluoropolymers. Some fluoropolymers have a higher demand driven by certain sectors, which is either, for example, PVDF by EV or certain other fluoropolymers which are going into semiconductor industry. So fluoropolymer as a sector has a very strong fundamental and a growth rate. So we have put in capacities, and as I said earlier, that we have invested a lot on the back end, which is the monomer capacities. So our current